welcome once again to CN Professional Institute. We are still on Ifrs 15. I think we've looked at all the videos on Ifrs 15. In this session, we are going to solve questions. So welcome to the question and answer session where we are going to pick or select questions and what solve. Right? We have so many questions here, okay, which we are going to solve. We are going to select some and then solve. Okay, so welcome to the question and answer session. Good. Now let's start with question 14. Okay, so let's solve question 14. Question 14 has what I should see, all the elements. Okay, it has everything in there. We have a question where revenue has already been recognized for the first time, and then therefore we are at the second or the third stage. We also have we have onerous contract, okay, where there's overall contract loss, and we also have where progress cannot be measured. So this is a very nice question to start with, right? So question 14, let's look at it. This is on 31st March 2019, CN Professional Limited had 4 construction contracts in progress. So you have A, B, C, and what? D. You have contract price, cost to date, estimated future cost, revenue taken in earlier years. Immediately here, revenue taken in earlier years, it means they've recorded revenue before. I get in this is not the first time we are recording revenue. Then we have cost of sales taken in the earlier or recorded in the earlier years. Okay, we have progress billing, we have cash received to date, and then it says more notes here. Contract A was completed during the year. If a contract is completed during the year, it means progress is 100%. Okay, so you can decide not to get the progress, better so you can solve it yourself. But immediately the contract is completed, then progress is what, 100%. Contract C commenced on 1st May 2018. Contract D commenced on 1st January 2019. It is not considered possible on 31st March 2019 to assess the outcome of contract D with any certainty. CN Professional Limited recognizes revenue based on proportion of cost incurred to date to expected total cost. So they are telling us CN Professional Limited uses the input method. This is the input work method. The requirement is show the amount that will be recognized and presented for each contract in the financial statement of CN Professional Limited for the year ended at 1st March 2019 and show the balances in those statements, right? So this is a very nice question. So let's start. Let's tackle them one by one. Let's start with contract what A. Okay, I think doing it one by one will be very easy. So let's do contract what A. We're told contract A was completed during what the year. It's not difficult. I mean, it's never difficult. Okay, so let's start with contract A. So we are doing question 14. So let's write it question 14. Then we said we are picking contract what A, right? So question 14, contract A. Okay. So we are going to follow the processes we've learned. Okay. The processes that we have learned. So we said the first step is we have to determine whether there's overall profit or loss. That's the onerous contract, right? So we have to check if there's overall profit or what? Loss. So overall profit or loss. Okay. How do we get the overall profit or loss? We said we pick at the contract price. Okay. We pick the contract price and we compare it with the total cost. So what the contract price is 1,000. So I hope you can see where I'm picking the figures. Okay. So the contract price there, it has been stated there clearly. Okay. Okay. So here, this is what I'm talking about, contract, this figure here. Okay. That's what I'm talking about. Let me see if I can zoom it some more. Okay, I think this will give us a better view. Okay, so contract A, we have a contract price to be what? 1,850,000. 50. Then let's go and look at the total cost. Okay. So what's the total cost? The total cost consists of both cost to date and what? Cost to complete. So these are cost to date here. This figure cost to date. 1 million. Sorry. Yes, 1 million, but it's 1,490. Okay, 1,490. Future cost is zero because the contract is completed. Are you following? So cost to date is 1,490. Cost to complete is what? Nothing. So the total cost will be the same as the cost to date. Are you following? Which is 1,490. Okay. So this is our these are cost. These are total cost. Okay. So you realize that we have profits, but we have overall profits, right? So this contract is not onerous. So when you deduct, you get 360. So we have 360 as our total what? Profits. Are you following? Very good. Then we go and look at step 2. Step 2 says we have to determine the progress. Okay. So step 2, let's get our progress. Now, how do we get the progress? We said progress is equal to, here we are using the output method. If you come here, it's stated, they said CNC is the output method. Okay. It's here, proportion of cost incurred to date to total what? Expected cost. Okay. So they use the output method. Okay. So the output method is what used. So with the output method, we set is cost to what? Date divided by our total cost. Then we multiply by what? 100. Okay. So what's our cost to date? It's in the question. It's 1,490. That's our cost to date divided by total cost. Total cost is the same 1,490. Okay, because we said we have no cost to complete. Estimated future cost. Okay, that's the cost to complete and it's zero. So in this case, the cost to date is the same as our total cost. And it makes sense because we're told that the project was completed. Are you following? The project was completed. So when you multiply, you see your progress will be what? 100%. I said from the beginning that if the project is completed, then progress will be what? 100 what percent. It's completed. So progress is what? 100 what percent. So we have our progress 100%. 3. Let's look at revenue that we are going to recognize. So step 3, let's check the revenue that we are going to recognize. Okay. So step 3, the revenue will be, how do we get the revenue? We said we apply the progress rate on the contract price. So the progress rate is what? 100%, right? So we have 100% by what is the total contract price? It's in the question 1,850. I hope you are seeing it here. Total contract price 1,850. So 100% of 1,850. But here we said that we've already recorded revenue in the previous years. Are you following? We have already recognized previous revenue. If you come here, it says here, look at this. Look at this 990 here. It says revenue taken in the previous years. And we said that, okay, if the contract is not at the first stage, are you listening? If it's not at the first stage, but it's at the second or third, and therefore revenue has been already recognized, portion of revenue has been recognized. When we apply the progress rate on the total contract price, we have to deduct the previous revenue what recognized because this profit or loss and the items they are not cumulative. They're just items for only the year. Are you following? So we have to go and deduct any previous revenue what recognized. Okay, the progress rate is cumulative. Are you following? If we make it 100% times the total contract price, we are going to get the same 1,850. If we don't deduct the previous revenue, it means we are going to deduct the whole 1,000, okay, 850 in only the last year. It means I'm going to record the whole amount in what? In the last year. Meanwhile, others has already been what? Recognized. So if you don't deduct, you overestimate the revenue. Look at revenue taken the previous years, 990. If you record the whole 1,850, it means you are overestimating the revenue. The 990 plus the 1,850, it's far or it's more than the total contract price. So that's why I took you to the format that if you apply the progress rate on the contract price, you have to less any previous revenue what recognized. So in this case, we've taken what 990 in the previous revenue. Are you following? Or as previous what revenue. So you have to deduct previous revenue what recognized. Okay. So that will give us what 860. So we have 860 as the revenue to recognize. Then we have cost of sales. Okay. Cost of sales to the same thing. What is the cost of sales that we are going to record? We said with the cost of sales, we record cost to date. Are you following? As a cost of sales. What's the cost to date? It's here. That's the 1,490. 1,490. We have to bring it here and we deduct the previous cost of sales recognized here. Cost of sales recognized in earlier years, 800. So you have to take that 800 what away. And you know why we are taking the 800 away? We said if you don't take the 800 away, it means what it means is that we are recording the whole cost to date in just 1 year, which is not so. So we have to record or we have to deduct the previous revenue recognized and then the previous cost of sales what recognized. So when you do it, you get this what 90. Okay, so you pick cost to date and you less previous cost to date or previous cost of sales what recognized. Are you following? So you pick your cost. If you want to get your cost of sales, we say cost of sales, we use cost to date. So our cost to date is the same as our cost of what sales. But if there is previous cost of sales recognized, if previously we've recognized cost of sales, then we have to less it. Are you getting it? Because the cost to date is cumulative. Okay. So we will less and we get this. So now when we deduct, this one, what do we get? So we are going to have a profit of how much? 170. So we cross-checking the figures, okay? If I make a mistake, just correct it. But I'm just presenting to you how it's supposed to be done. Okay. So I'm not really into the figures, just the understanding why we are deducting the previous cost of sales and then the previous revenue what recognized before we record revenue. Okay. Okay. Then let's go to step 4. 4 is the statement of financial position. Or we go to statement of financial position, and I told you for financial position, the figures that are cumulative, they are not. So let me say statement of financial position. In the statement of financial position, we said we record two main things, right? We record contract asset or liability, and then contract receivable or payable. So how do we get your contract asset or liability? We bring revenue recognized. Okay, revenue recognized. We've looked at the changes made. Okay, so we bring the revenue what recognized. Then we less amount what billed. I am saying now this revenue recognized is cumulative. If you look at step 3 here, the revenue we recognized was check. It was what 860. Are you following? That's revenue recognized for the period 860. But that's not the revenue recognized that we are going to bring. Statement of financial position items are cumulative. So if you've watched the previous video, I told you that the revenue recognized, it is revenue recognized to date. Okay, so when you want to get your contract asset or liability, it is revenue recognized to date, less amount billed to date. So with the financial position, all the items are to what? To date, to date, to date. Are you following? So in this case, we are not going to record the 860, but it will be the whole revenue to date. Are you following? So it could either be the 860 that we are recording in this year, plus the 920 we have recorded in the previous year. Are you following? Or it just be the progress rate here, the 100%, okay, by the 1,850. Okay, and that will give us the whole 1,000 what 850. So that's the revenue we've recorded to date. So this 1,850 here is the same as this what 860 plus what the 920. Sorry, the 990. So the 860 plus the 990, it will give you the 1,850. That's revenue recognized in the previous years plus the new revenue recognized. That gives us the revenue to what date, not only revenue for the P&L. I said financial position items are cumulative, so you have to record revenue from the time started to date. So revenue to date, okay, and that's why we have to use the whole 1,000 what 800. So we have revenue recognized to date, then we less amount what billed. Okay, so let me push step 4 down. Okay, so financial position. So let's less amount billed. So amount billed. How much have we billed the customer? It's in the question. Progress billing is here. Okay, so we bill the customer the same amount. We bill the customer 1,850. Okay, we bill the customer 1,850. That's the amount billed in the question. So here you realize that we have a zero figure. Okay, as the contract asset or liability. So there will be no contract asset or what liability. Okay, so there will be nothing here as contract asset or liability. Okay, so we have zero. So that's how we go about the B, the A. And then here too, there will be no contract assets. Or sorry, there will be no contract receivable or payable. Why? Because the amount billed is the same as the cash received. They are the same. So where amount billed is the same as cash received, there's no contract receivable or payable. Let's look at contract B. So let's look at contract B. For contract B, so let's see overall. Let's do that one too. So overall profit or loss. So what's the contract price? The contract price is 750. Okay, 750. Then total cost. Our total cost is that's the cost to date plus the cost to complete. Okay, so cost to date is what? 590. Cost to complete is what? 25. So 590 plus 25. 590 plus 25 gives us 615. So we have 615 as 615 as a total cost. Okay, and here when you deduct, there's no onerous contract because we will still have what? Profit, right? So what's the answer? If you deduct, you get 135. So as I said, we're checking the figures. Okay, 135 as the we have 135 as the profit. Okay, as the overall profit. Overall, this is not the profit that we are going to record in the P&L. It's just the overall profit for the contract. Then this is step 2. So what we are doing is we are doing for contract B, right? So we can put it up here, contract B. Okay, so contract B, the first one we looked at the overall profit or loss. Then step 2 is we look at the progress. So step 2, we look at the progress. And what will be our progress? We said here we are using the output method. Okay, sorry, we are using the input method. That's what the question said. So it's our cost to date divided by the total cost times 100. So what's our cost to date? 590 divided by total cost is what? 615. That's what we've done. Then by what? 100. Okay, so 590 divided by 650 by 100. So we have 95%, that's 95.93%. Okay, so 95.93%. So these are progress. We are using the output. Sorry, we are using the input. Sorry, we are using the input. So input is cost to date divided by total cost times 100. Step 3, we are going to record revenue. That's the P&L. We are going to the P&L. So in the P&L, how much revenue do you recognize? So we said revenue, we apply the progress rate. Okay, that's 95.93%, 95.93%. Okay, times the total contract price. What's the total contract price? 750. Okay, but we are saying that in B2, the same thing, we had revenue taken in earlier years. So it means that with B, this is not the first time we are recording revenue. They've taken revenue in the previous year here, the 100, revenue taken in previous years. So we also have to less that one. Okay, other than that, you will overestimate the revenue because we said the progress rate, the 95%, 99, 95, 95.93 is cumulative, right? So we have to record everything. We have to deduct the previous revenue recognized so that we'll have only revenue that we're going to record. Okay, so I think when you multiply this, you get 719, then minus the 100. We have to let the 100 previous revenue recognized. Okay, and that will give us what? 619. We have 619. Then we have cost of sales. Okay, our cost of what? Sales. We say cost of sales, we pick cost to date. The same thing here, we pick cost to date. Okay, which is here, cost to date for B is 590. 590, but we have to less 590, but we need to less cost of sales taken in earlier years, this 100. Cost of sales recognized in earlier years, 100. So we have to less, and then that will give us 490. That gives us what? 490. So 490 is the 490 is the cost of sales that we have to record, and then we deduct, we'll get a profit of 129. Okay, so these are profits that we have to record in our books. Profits of 129. Okay, then let's go and look at statement of financial position. Statement of financial position. This question is very, very heavy. It's a very heavy question. Okay, it's not that heavy though, but as I said, it has everything. So for statement of financial position, okay, so let me do that one here. So let's bring that down. Statement of financial position to step 4. In a statement of what? Financial position. In a financial position, what are we going to record? If we said we record contract asset or what? Liability. And how do we get our contract asset or liability? We said it is revenue recognized to what? Date. I following. So it's revenue recognized to date. Okay, it is to date. I'm saying again, it is to date because financial position items, some of financial position items are cumulative, not the revenue recognized for only the P&L. If you come to P&L, come and check the revenue. If you come here, okay, you realize that, okay, we recorded revenue of what? 619. Are you following? That's the revenue we've taken the previous year. After we've deducted the 100 taken in the previous year, we recorded 619 as revenue for the year. Okay. Now, to get a cumulative revenue, it will be the 619 that we've taken in this year, 619 here, plus the 100 taken the previous year, which will give us 7 what? 19. Are you following? That's what we are going to record in the financial position, cumulative. The 619 taken this year plus the 100 taken in the previous year. Put the two together, the previous years, put the two together, and that will give us 719. Okay, that's the revenue we are going to what? Recognize. Okay, okay. So that one, which will also be the same as the 95.93%. Okay, when the 93% of the total contract price of the 750. I follow me. It will give you the same figure. It will give you the same figure. Okay, as you adding the two. Okay, so that's how we are going to do it. And then we said that will give us 719. That is 719. We said the 719 is the same as what? The 619 we've taken in the current year plus the 100 in the previous year. Okay, then we go to with less amount billed. With less amount billed. How much is the amount billed? If you go to B, how much did you bill the customer? We bill the customer progress billing to date 690. So we less 690 here minus what? 690 minus 690. Okay, okay. And then that will give us 29, if I'm right. Okay. So that will be contract assets. Okay. So contract assets of 29. Okay. So this one will be taken to financial position. If you are preparing your final account, the full account, we are going to record final contract asset as current what? Asset. Okay. Then we also have contract receivable. We will have a contract receivable here because look at the amount billed. Okay. How much did you bill the customer? We bill the customer 690, and then the customer gave us 600. So cash received is what? 600, right? So you realize that the customer will still be owing us, okay, because we billed the customer 900. I'm sorry, 690. We billed the customer here, amount billed 690, but the customer gave us 600. So there will be contract receivable. We have 90 to be received. Okay, so we call this one contract receivable. Contract receivable of what? How much? 90. This contract receivable of 90 will be recorded also as current what? Asset in our books. Okay, so that is B. Let's look at C. As I said, this question, it's a lot for contract. Let's look at contract C. So contract C. Contract C. Okay. So with contract C, we okay. So level 2, we have to do everything that we have to do some. Okay. So that one we test. Number one is to do overall profit or loss to check if there's onerous contract. So overall profit or loss. We check if there's overall profit or loss. And how do we do it? We bring contract price. What is the contract price? It is 960. Then we compare it with the total cost. So our total cost, which is the cost to date plus cost to what? Complete. Okay. So we come to see cost to date is what? 405. Estimated future cost is what? 600. So when you put the two together, you get 1,000 and 1005, if I'm right. Yes, I'm sure. 1005. 1005 is our total cost. Okay. So when you deduct here, you see there'll be a loss because the total cost is more than the contract price. So we have a loss of 45. Okay. Yes, we have a total loss of what? 45. Are you following? So immediately we have a loss, then we say this contract is onerous because we are going to have overall loss. Are you following? Of what? Oh, sorry, not 450, 45. Okay. So we have overall loss of what? 45. And we said this contract is onerous. We said immediately we do this, and then there's onerous contract. There's overall contract loss. Then we have to record all the loss immediately. So when we go to the P&L, we have to record all the loss what? Immediately. Step 2 is to get our progress as usual. Here, don't forget we are still using the input method. Cost to date divided by cost, and cost to date divided by total cost times what? 100. Okay, what's our cost to date? Is in the question 405 here. So we pick 405. So that's 405 cost to date divided by total cost. Total cost is cost to date plus cost to complete. That's what we added, and we got what? 105 and 1005. Okay, 1005, then by 100%. Okay, so what do we get as the progress? 405 divided by 1005 times 100 should give us something like 40.30%. Okay. So just check if you see any error, you just correct it, or the roundings and stuff. Okay. I'm very sure you are just following. The most important thing is you follow, get the idea how it's done. Okay. Figures, getting right or wrong figures they are not really big deal, but like you following and getting everything is the most important. And so we've got the progress. Let's go to the profit or loss. Profit or loss, we are going to record revenue. How will our revenue be? We said it will be, we apply the progress rate 40%, 40.30, 40.30% times the total contract price. If you go to see what's the total contract price here, 960 is the total contract price. So we multiply this by what? 960. Okay. Okay, let me take this one to the next step, the next stage. Okay, let's go to the next page. Okay, so we are looking at step 3. We are looking at our revenue. Okay, so we said we multiply the 40% by the total contract price 960. And if there's previous revenue recognized, we did that. By this question in for the contract C, they've not recorded any previous revenue, right? And it makes sense. It says it commence contract C. If you can make contract C commence on 1st May 20 what? 18. Are you following? Which is in the year, like it's in the reporting year. Are you getting it? So yes, I said it, they've not recorded revenue. This is the first time we are recording revenue. So there's no previous revenue. If there's previous revenue recognized, we would have deducted it. Fine. Okay, so this by this gives us 387. This gives us 387. Okay, so 3. Let me bring this one in small. Okay, so we are step 3. So okay. Then, so that's our revenue. Then let's go to cost of sales. Cost of sales. So cost of sales too. We said we pick cost to date. What's our cost to date? 405. So our cost of sale, cost to date becomes our cost of sales. Cost to date becomes our cost of sales, right? Okay, so cost to date becomes our cost of sales 405. And I said if we had previously recorded cost of sales, we would have deducted, right? So when you deduct, let's deduct and see what we get. So you pick your calculator and do this. I told you what to do where there's overall contract loss, where we have on-loss contract. So 387 minus 405. We have a loss of 18. 308 minus 405. You have a loss of what? 18. But if you come here, what's the overall loss? 45. Yeah. Are you following? The overall loss is what? 45. But if we should record it this way, we record only loss of what? 18. And it's like saying if there's overall loss, you have to record all the loss in the first year. So in this year, we don't have to record only the 18 loss. I said the 387 minus 405 is what? 18. We have to record the 18. We have to record the whole 45. So we have to record what we call extra loss, which is called provision, right? So we have to record extra loss. Okay, and what will be that extra loss? Now we've got loss of 18, but we have to record loss of 45. Are you following? So we have to record another 27, extra 27 loss. You have to record extra what? 27 loss. So that when we do it this way, we'll come and get what? The 45 loss. Are you following? So our loss will now be what? 45. So we have to record extra 27 loss so that the total loss will now be 45. Okay, so that is that. It's very, very simple. It's nothing difficult. We said that if you subtract, if you make 38 and 387 minus 405, it's 18. So we have a loss of 18, but we have to record extra loss of 27. Okay, so that our total loss will move to 45. Okay, then let's go and do statement of financial position. Okay, statement of financial position. Statement of financial position. This is step 4. Okay, let's do it. Statement of financial position, which is step 4. So in the statement of financial position, as usual, we have our contract asset and contract liabilities there, right? Okay, so what will be our contract asset? We said revenue recognized to date. Don't forget that revenue recognized to revenue to date. And what's our revenue to date? That's the one we did in P&L, 387. That's what we have here, 387. And this is the first time we are recording revenue. So the revenue to date will be the same as the revenue recognized in the P&L. Then amount billed. How much did we bill the customer? Amount billed. If you look at contract C, okay, we bill the customer. Let me see. Okay, progress billing, which is what? 650. So we bill the customer what? 650. Okay. So when you deduct, there will be a contract liability. Okay. We have a contract what? Liability of how much? When you deduct, it's always be 263. Just subtract and write your answer down. 263 as our contract what? Liability. And we are going to record this one in our statement of financial position as current what? Liability. And then don't forget that we also have another liability that we have to record. Okay, we have another liability that we have to record. Also, we have contract receivable. So look at the amount billed. How much did we bill the customer? We billed the customer 650, but the customer has given us only what? 600. So the cash is what? 600. Okay, the cash is what? 600. So you realize that the customer has not given us or has not paid us all the amount we have billed. Okay, so there will be a contract pay and receivable. There will be contract what? Receivable. There will be a contract receivable of 50. This is also an asset which will be recorded in our financial position. So this is an asset. We have to record it as an asset, but the contract liability, liabilities, we have to record it. And then there's also one another liability here. Don't forget the provision here. The extra loss of 27,000. The 27. Okay, it's also a liability. Okay. So we also have provision. We have to look at provision in our books in the financial position as a liability. So provision of how much? 27. So provision of 37 will go to the financial position as a liability. Then the 50 as an asset, contract receivable. And then we have contract liability of 263 also as what? A liability. Let's look at the last contract D. So I said this question, like, it has everything. Okay, so contract D. With contract D, we have so we're told that with contract D, it is not considered possible on 31st March 2019 to assess the outcome. So we said if you cannot assess the outcome or you cannot measure the progress, then what? Don't worry, you have to record revenue equal to your cost to date. Okay, you have to record revenue equal to your cost to date. So in that case, our revenue will just be the cost to date. Okay, so come here, what's our cost to date? 120. Our cost to date is what? 120. Then that's what we're going to record as revenue. And then the cost to this, which is same as the cost of sales. So cost of sales also what? 120. And then record zero profit. So if you can measure progress, record zero profit. That's what the standard is saying. So our profit is what? Zero. That's it. So we have zero profit. Let's go to the statement of financial position. So with that one, with the statement of financial position, okay, statement of financial position, we are going to record, okay, let me bring this one down. So with the statement of financial position, we are going to record some items, so some stuff there. Okay, let's do our contract asset or liability, and then that will be it. So how do we get the contract asset or liability? It is revenue recognized to date. So revenue to date, if you come here with D, we recorded revenue of what? 120. So we have revenue of what? 120, and then we less amount billed. Okay, it's in the question. Amount billed is 100. We will deduct and we have 20. Okay, as our contract asset. Asset of what? 20. Contract asset of 20, which we record in the statement of financial position as current asset. And then we have here we don't have contract receivable or payable, because the progress billing to date is the same as the cash received to date. So with D, we don't really have to worry ourselves. You can do the first step, which is you can check if there's overall profit or loss. And I'm sure here there's overall profit. There's overall profit because the contract price is what? 800. If you add 150 to 120 to what? 480. Okay, that should be something like what? 600. Okay, so there's overall profit of what? Something like 200 if I'm right? Then we can measure progress. So the stance, if you cannot measure progress or the outcome cannot be determined with reasonable certainty, then we have to record revenue equal to our cost of sales or record revenue equal to our cost to date so that our profit will be zero, right? So that's question 14. It's a bit yeah, it's not difficult, but it's a bit something. Okay, let's try one more and then we'll close. So with question 12, let's look at question 12. Question 12, we are not going to look at everything. Okay, the rest are very simple. I'll just touch on the L, okay, which is the same thing we've done here. Let's see with L. You see, if you come and check L here, okay, let's scan through the question. It says hard floor cool. Okay, hard floor cool fits out 9 clubs. The project generally take a number of months to complete. The company had 3 contracts in progress at the year ended 30th of April 2017, and the details are as follows. So we have the contract J, K, and L. We have their cost to date, cost to complete, contract price, work certified to date, and progress work payment. It says hard floor could account for profit on its construction contract using the percentage of completion derived from sales and as work certified compared to total what? Sales value. So you see, what method do they use? They use the output method, work certified over total contract price, work certified over total sales value, right? Let's do contract L. The rest are very simple, but like with contract L, I want us to look at it. Okay. So let's see question 12. We are looking at contract L. Contract what? L. Right? So contract L, we said our first step is to look at overall profit or loss, right? So overall profit or loss. How do we get it? It's our contract price. How much is the contract price? Okay, so when you come here, contract price is what? 300. Okay, so we have contract price of what? 300. Then total cost. What's our total cost? It is cost to date plus cost to what complete. Our cost to date is what? 320 and 220. Cost to date is 220. And then, oh, sorry, cost to date is rather 20. Cost incurred to date is rather 20. Cost to complete is what? 220. Okay, so when you add a 20 to 220, you get 240. So our total cost is what? 240. Okay, we deduct and you realize that we have overall profit of what? Overall profit of 60. Okay, overall profit of what? 60. So this contract is not onerous. Are you following? Then we go to step 2 is to determine our progress. Are you following? Now, here we are using the question says we should use the output method. Don't go and use the input. With the input, we can get the progress, but the question said we should use what the output is here. Are you following? Work certified over the total sales value. Work certified over total sales value, which is what output. Now, let's go to the question and check our work certified. For L, what's work certified? Can you see it's dash? Are you following? So we cannot get the progress. Are you following? So progress cannot be determined. So with L, okay, we said progress can't be determined. Progress can't be determined. Okay, so we can't determine progress. Progress cannot be determined. So the standard said, okay, if we cannot determine progress, then we know what to do. Since we should record revenue equal to what? Cost to date. We should record revenue in a way that our cost of sales will be what? Covered. Are you following? So in this case, how much revenue are we going to record? I'm going to record revenue equal to cost to date. So we are going to record revenue of what? 20. And then our cost of sales will also be what? 20. Okay. So cost of sales will be 20, so that we have zero profit. Cost of sales will also be what? 20, so that we have zero profit. So in that case, profit will be what? Zero. That's what the standard says if you cannot measure progress or the outcome cannot be determined with certainty. Then we go to step 4, statement of financial position. Statement of financial position will record current contract asset or what? Contract liability. Contract asset or contract what? Liability. How do we get our contract asset? Here too is the same thing. Revenue recognized. So let's bring revenue recognized to date. Revenue recognized. Okay, how much is it? 20. Okay, that's the one we are recording. Then amount billed. Wait, can you see is dash here? Yeah, amount billed or progress payment, right? Is dash. So yeah, it's dash. I following. So our contract asset will be what? 20. It means that they've not billed the customer yet. Okay, they've not billed the customer yet. So contract asset, we have a contract asset of what? 20. Contract asset of what? 20, right? So that's it. We have our contract asset of 20 because we don't have any amount billed. The customer has not been billed yet. Okay, so that's it. With JK, they are very simple. Okay, I think they are not onerous contract because if you compare the total cost, it's less than the contract price. I'm sure for both, right? So both are no onerous contracts. Okay, so very, very simple. Just pick your work certified. So when you pick J like this, you do your overall profit or loss, compare the contract price over the total cost, do your progress. Here we are using the output method, right? And with the output is work certified. So pick this one, work certified 312. Okay, 312. That's the work certified over the total contract what price? What's the total contract price? 416. Okay, so 312 work certified over the total contract price 416. Just divide, get the progress. That's all. Then go to step 3. Apply the progress on the total contract price, the 416. Then with the cost of sales, we said we take cost to date, which is what 320 here. That's all. Okay, so it's very simple. J and K the same thing. So take note of what L. Now that's it about question 12. So you saw the J and K, and then let me have your solutions in the comment section. Probably you can tell me what you've gotten in the comment section, right? Okay. We have this one. Yes, this was also something, a question like this, question 11, but it's not difficult. We also have question 10 here, some elements. Okay, and then we have, so there's this one question where, okay, this question since we've solved it already. I think question 5. Okay, yes. This one, it's not difficult though, but it has some element of financing elements, and then performance obligation at a point in time, right? So, question 5. Okay, so let's solve question 5 and the rest in the second part. Okay, so we'll continue and solve, I think, more questions, okay, in the second video. That will be, we are still looking at the question and answer session. Okay, Ifrs 15, we are solving more questions, right? So I'll see you in part 2 of the question and answer session, where we'll wrap up everything with some more questions and wrap everything up.